welcome to the Bullcast Podcast. I'm Katie Pickler, and with me is Nicole Ellis.
Hey, guys.
And Cort Winsett.
Hello, hello.
So, what are we talking about today?
I don't know.
I think I know.
I'm just here to record.
Did you get that memo? Did you read the
Do
memo?
you see the chair I'm sitting in? I am the engineer today. I don't have to talk. All I have to do is click record.
Obviously, we try and do kind of some stuff that's going on big right now. And a lot of the times in meetings, we talk about lines of credit. And so a lot of people are very familiar with what a credit card is. But then when you say line of credit, they're like, ooh, what is this? What is this magic carpet? What are we talking about here? So this is going to be a short, sweet, just kind of basic of what is a line of credit. Should you have it? Should you not? Kind of the do's and don'ts around that. But as always, we are going to start off with a fun little list. And so this is quirky credit cards that actually exist.
Ooh.
Ooh, fun. Start us off, Nicole.
This is a perfect one for me to start because you know I'm a big outdoors person.
Oh, yeah. I see your camo every day.
I love it. So the first one is a Ducks Unlimited Rewards Visa card. This is actually pretty cool because a portion of every purchase you make with this card is donated to the Ducks Unlimited efforts to preserve wildlife habitat and hunting grounds by replanting forest and restoring grasslands and watersheds.
That's cool.
I can get behind that.
Okay.
Yeah. So, I mean, you make those purchases and then you're giving back with the rewards. That's very cool.
Okay, yeah, but what about this next one? It is the WWE credit card, brother. The WWE credit card is designed for WWE fans who are also building credit. It earns 1% cash back on eligible gas and grocery purchases like Slim Jims, yeah, and monthly cell phone, internet, cable, and satellite TV services.
Okay, so this is just a WWE credit card.
Yeah.
So this is not really, it's not like it's
It has
going,
nothing to do with the WWE.
it's not like it gets you discounts on WWE tickets or anything like
No.
that. But
You
it's,
doesn't
turn
look
in,
like it.
You don't turn in the rock.
no. Yeah, okay. Oh, what about a Precious Moments Visa Signature
Ooh.
Rewards credit card? It's a cashback card with a sign-up bonus of sorts that covers less than 25% of the typical cost of a Precious Moments figurine.
Ah.
Use the card within 90 days of opening the account, and you'll receive a $10 Precious Moments online gift code.
You got to be really into precious
You got to be
moments.
real big into Precious Moments. Like, there's a lot of things I'm real big into, but I don't know that I would get a Precious Moments card.
I mean,
Yeah, I mean, teach their own.
This next one I could see being used a lot.
Yeah, a PlayStation Visa credit card. This is a $0 annual fee card that rewards PlayStation-related spending, among other things, and lets you redeem those rewards for more PlayStation-related spending, among other things. So where's my gamers at?
Yeah,
boy.
this is for the gamers for sure. Way to spin that of, oh, look, I'm using this and it's helping with PlayStation. Okay.
Okay, now we're getting on to the niche credit cards that no longer exist. So, I mean, I think with some of these, I'm going to be like, I wonder why that one didn't make it. The first one is the Garfield Visa with rewards.
I mean, this should have been like associated with food, like spaghetti. And,
Yeah.
Lasagna.
Lasagna, not spaghetti.
yeah.
Yeah,
Get
lasagna.
1% off every lasagna you buy or something?
Yeah, that'd be
Come on.
great. What about the Star Trek credit card by NASA Federal Credit Union?
Okay, big for the Star Trek fans. Okay, I bought the Hello Kitty credit card.
I feel like it still would work in Japan right now. Like,
I mean, they
Hello
might
Kitty
have
is
one.
still huge.
It's huge, yeah.
Okay, so International Brotherhood of Magicians Rewards Visa card.
Ooh.
That sounds amazing.
Now, Cort, I've seen you have this card in the
I
past.
mean, you can apparently, I'm betting, because it doesn't tell you, but I'm betting that you could go to a magic shop and use it and get a discount at any magic shop.
Maybe
Very
a bunny.
When you're done using the card, it just disappears.
It disappears.
That's
It's
the
magic.
perfect credit card.
Then I can find it in your ear later.
What about a World of Warcraft rewards Visa card?
My word, I never got into this.
I feel like the PlayStation guys would like this card.
Yeah.
And last on the list, Katie, you might have used this in the past. It's a Kentucky Derby Platinum Plus Visa card.
Yes,
Yeah, I
every
mean,
time
like,
you
does this
buy with
help
it,
you get tickets?
It gives you credit toward a stallion, is what it does.
Oh, okay.
Obviously, I mean, I can make up whatever I want. The card is now defunct.
Yeah, it
I'm
doesn't.
saying it gives you credit toward buying your own horsey.
I mean, there's so many credit cards out there that'll get you, and it's, very specific. And as we've talked about before with credit cards, if you can justify that the rewards are worth it, the annual fee, things like that. Like I personally have an Amazon credit card that gives me points back to use on Amazon, which it just continues the cycle. But I've got a Disney one that gives points back towards Disney and discount with tickets, things like that. I've got a Target one. I, over the years, I've got a Best Buy, I've had a Victoria's Secret, Old Navy, I had a Pier 1. So I've done a lot more like stores. And then instead of like this allegiance, this like I'm joining World of Warcraft or things like that. But they're out there, and if there's a need for it and they can justify it and get people on board, then that's a whole nother
Okay, but we're not really here to talk about credit cards today.
No.
We've hit that one before. We're here to talk about something else. What are we here to talk about? We're here to talk about credit lines.
Understanding lines of credit. So what is a line of credit? It's a revolving credit account with a borrowing limit. Okay, so like a credit card, right? Where you've got, hey, you can spend this much and it's revolving, meaning that you're using it and then you're paying it off. You're using it, you're paying it off. And so it's an open amount of money that is available for you to use. Key features: borrow as needed up to your limit, pay interest only on the borrowed amounts, and repayment flexibility, minimum payments or larger amounts. And so that is where like, hey, I've got an open line of credit for $50,000, but I maybe only have $10 charged on it, or I have $50,000 charged on it. So it's very, very unique and customized in that way. Cort, talk to us about qualifying for a line of credit.
What we're really discussing here isn't just a line of credit. Let's be a little bit more specific. At least you're on the front end. What we're talking about is unsecured lines of credit.
Explain it to us, Lucy. Unsecured.
Unsecured. Okay, so you have two different types of transaction. You borrow money and it's unsecured. That's your basic credit card, or in this case, line of credit. And what that means is you're not offering them anything other than your promise to pay them back, basically. And if you choose not to pay them back, all they can really do is sue you for the amount you owe them, and then try and collect that judgment. They're also going to charge you a ton of interest, probably more than you would if you were secured. I'll tell you what secured is in a second.
Yep.
But they're going to charge you a ton of interest probably, and there may be fees, there may be transaction costs, there may be, there's all sorts of stuff that goes along with this. But the basic idea is you have not promised them that they can take your car or your house or your
unborn
personal
child
belongings if you don't pay them. So it's unsecured, because the car would provide them with security that you were going to pay them, because if you don't pay them, they can take your car. Which brings us to secured transactions. When you have a secured loan, there is something that you own, that you have an ownership interest in, that you can promise you will give them if they will loan you the money. And that security for them allows them to offer you a loan against the value of whatever it is you are using to secure the loan, usually at a lower interest rate. Usually the terms for the loan are going to be considerably better than it would if it was an unsecured transaction. So that's when you're going and getting something like a home equity line of credit or something like that.
Yeah. So if we're getting, we decide we want to get this WWE credit card, which is a line of credit, then how do we qualify? We're going to have to look at our credit score.
Yeah.
Lenders are going to look at your income, your employment history, debt to income ratio. So what I want to be clear about is you will go to Blockbuster. It doesn't exist anymore, but you will go to a store, you will go online shopping, you will do things, and it'll pop up and say, do you want to open a Starbucks credit card? Do you want to open this? Do you want to open that? And a lot of people go, sure, why not? I spend a lot of time here. Every time you open up a line of credit, every time that they even inquire, hey, could you qualify? What amount would you qualify? Then that's directly going back to your credit score.
Yeah.
And so while it's not bad to have different lines of credit for different things and if it benefits you, but you don't want to end up looking at your credit score and seeing, oh, Nicole has a Hello Kitty and a World of Warcraft and a WWE and a Ducks Unlimited and a Target and an Amazon, and she's got all these lines of credit. Then even if she doesn't have a lot of revolving debt on it, it still is a ding, because every single time they've had to go to her credit score, see what her credit is. So it's an inquire of what is it. And then she then is showing she's got all these lines of credits out there. And so that's where you've got to be careful of what's the right amount. And it's not a universal. The right amount of line of credits for Cort is different from Nicole, is different from me. And so looking at that, they're going to try and figure it out. And that is why sometimes, if you calculate in the wrong information, I remember when I first got my Target card, I put the wrong income in. I put, I missed a zero or something. Like I said, I had made $3,000 instead of $30,000 or something like that. So I only got approved for $1,000 credit card or something like that. And it finally was not until it was up for a moving to the next level card that they were like, do you want to input your income? And I'm like, yes. And it's like, oh, now you've got a higher limit. I'm like, oh, thank you. Finally. Okay. So if you've got this line of credit, then, how are you accessing these funds? Well, on a typical credit card, then obviously you've given a card, you've got an online account more than likely. The funds are magic. Like that magic card. They're there. They're available for you to use. You're going to get a bill to pay each month, things like that. Other lines of credit, whether they're secure or unsecure, how do you access these funds? So you can do check, online transfer, debit card. And then there's specific time periods that go into the borrowing of the money. And so that's something that, with the home equity line of credit, then obviously that is going to, for the most part, they have about a 10-year period that you can charge on it. And then after that point, you then have to start paying on it. I'm not saying charge, and don't pay. You still need to make some payments towards it. So repaying your line of credit, interest accrues on borrowed amounts from day one, minimum payment requirement, even if it's not at the limit, and consider making larger payments to save on interest. So again, your credit card line of credit is going to not charge you interest until the end of that cycle. So the end of that 30-day period. Home equity lines of credit, personal lines of credit, things like that. Some businesses have an operating line of credit. There's so many different ones out there. A lot of those charge interest daily, which is why I was talking to a client the other day, and they know they're going to have some big expenses coming up. They said, so should we pull it from our line of credit? And I looked at their whole financial picture and I said, yeah, absolutely. I think that's a smart move. I said, but do not pull it until you need it. Because if they had pulled it now, they would then be paying interest for the next, 2-3 weeks in addition to the time period it's going to be out, versus if they wait and pull it, because theirs is structured where it's transfer online from one line of credit to their bank account. So that's the other thing is it's there, it's available, but only use what you need. You want to talk about being responsible?
This is one of those things that we have harped on for all the years that we've been doing this podcast, and that is, the same principles apply. The creditor will happily let you roll a balance over as long as you want, and they will happily charge you interest for maintaining that balance for as long as you want, up to a point, and then they'll say, okay, now it's time to pay us back that balance. So you're getting charged interest on whatever you've taken out against your line of credit, and that is costing you money. So the best way to manage that line of credit is to pay off the principal that you have borrowed so that you are not charged interest. And again, if you've got an unsecured line of credit, you're probably paying a pretty decent amount of interest. Mm-hmm. And you might be able to put that money to better use, earning you interest or borrowing at a lower interest rate than you're getting if you're borrowing at a high interest rate. So
opportunity cost.
Be mindful of your balance. And if you are being charged a high interest rate, you want to pay that balance off as quickly as possible.
Okay. Oh, shoot. Cort goes in and thinks that he's just getting an oil change. And they say, buddy, you need all 4 new tires. Ouch. That's a pretty penny. Cort could pull from his bank account and pay that off, or he could put it on a credit card for World of Warcraft and get some gamer points and be able to then, yes, he's paying for his tires, but he's also getting some points. And he now has 20, 30 days, depending on, the term of that, to then pay that off and have that where that money's not coming out of his bank account.
It's funny that you bring up that as an example, because we actually have a credit line at a mechanics. And anytime we make a purchase, anytime we have work done that we pay for with that line of credit, that particular invoice, we have 6 months interest free. So we basically have 6 months to pay them back And if we get them paid back before the 6-month point, then we don't owe them any interest. Obviously, on 6 month and a day, they're going to charge you all of that back interest, and they're going to start ginning up more interest moving forward. But if you can pay them off in the 6 months, it's a pretty good deal, because we've had some pretty major car issues, and it seems like about once every 6 months we're having a major car issue, and we can go in and put it on our line of credit, get the car fixed. And as long as we pay it off within 6 months, then A, we don't have to pay that interest, and B, our credit will be free so that we can spend it on the next time our car breaks down.
And you're spacing out your cash flow, so you're allowing it where it's not all coming out at once.
Yeah.
It's allowing you guys to still be able to save, not dip into your reserve, things like that. Best Buy is really great about when they've got appliances and, electronics. Our TV busted, just, of course, it never, the appliances never break at a convenient time ever. And so whenever to Best Buy, I could have pulled from my bank account and paid for the TV. I could have just put it on a normal credit card and paid it off at the end of that month. But they were offering essentially a line of credit, a financing option for a 6 months time period that you can pay it off. And so I took advantage of that, because why not? And then, of course, one of the things to be careful about is once you start that, then companies, borrowers, things like that are going to see, hey, Nicole pays her bills. She's a really good borrower. And they're going to entice you with, well, if you buy this, you can get this credit card, you can do this line of credit, you can do that. And so it's being strategic with it and not having
strategery.
Yeah, you've got to be careful with it, because something that makes sense, like, hey, a TV that costs several $1,000s, breaking that up over financing, expensive car, things like that. But don't finance a cheeseburger over, 6 months period. Be careful with these line of credit. Think about what it's costing you.
I'm pretty sure Amazon the other day offered me the opportunity to spread out my payments for a bag of dog food I bought. I was really?
No. Yeah, that is trending right now, where all these places, they're showing like, hey, you can pay this now, or you can spread this out over X amount of payments. And it sounds great. You're like, oh yeah, like I can just pay $40. But you need to read the fine details. You need to see about it, because is it one of those, because some of them will say, yeah, you can spread it out over 4 or 6 months, but then there's going to be a service charge, an interest charge charged every single month.
It's funny that we're talking about this. One of the things that just sets off all kinds of alarms in my head is to bring back in our friend who we have conversations with on a regular basis, obviously, Dave Ramsey. I spoke to somebody the other day who is a big Dave Ramsey follower, and very, very opposed to having any debt, as most big Dave Ramsey followers are. And I had a conversation with the person about whether or not it was okay to have debt, and whether or not you could carry some debt at a low interest rate and use the money for something better, to have better gain on something else or whatever. I gave the person the whole spiel. But then, as I'm talking about it, one of the things that you have to remember when you're telling people about all these great things you can do with debt, and you can carry the debt just so long as you pay it off in time, so that you're not charged interest, or so long as you don't carry too high of a debt for too long and it affects your credit score, all of these things, what does it require? To be able to use debt like we describe, you have to have some self-control. Mm-hmm. You have to be responsible about your use of the debt, and you have to make sure that you're actually following the rules, so that you don't end up hurting yourself by getting zinged with like some really super high interest rate because you didn't pay off your debt in time or whatever. We're not just saying, yeah, sure, go out there and open up a line of credit.
Get all the lines.
And, there are rules, and so be sure that you're paying attention when we tell you, like, yes, you can use debt in this way, and yes, it can be advantageous. You can spread out your payments, so on and so forth. But if there is a 6-month cutoff on paying off that debt, you need to make sure that it is paid off in 6 months. You need to have a budget for how you're going to make those payments sufficient to pay it off in 6 months.
A home equity line of credit's the one I think about the most, but there's other lines of credit that this happens where, okay, for 10 years, I've been charging, and I've only had to pay, $100 a month. I've had to pay just very little, pretty much interest only. Then all of a sudden, at the end of that 10th year, sometimes they let you revolve it and start over again and continue it. But what are you going to do if all of a sudden you've built up, $50,000 worth of debt, you've been paying $100 a month, and now they, say, okay, sorry, it is locked. You cannot charge anything else. and now your monthly payments are going to be $800 a month. You just went from your cash flow of $100 a month to now $800 a month. That's a huge hit to you that if you didn't see that freight train coming and you weren't prepared, it's going to be devastating. And then what was used as a tool to help you has now then hindered you. I will echo again, because we want to make sure this is driven. A line of credit is a tool to help and put things on it because it's in the best interest overall, that then that extra money could be invested, or it's better to break the payments out or things like that. Or maybe it's a way of, there's debt consolidation credit lines that help you kind of merge everything together. But this is not an invitation where I have $50,000 credit line, I can spend $50,000. That is not at all what a credit line means. It just means that is available should something come up, should you need to use it. It's there. You've been approved for it. But this is not Bullcast saying go spend it all.
So additional considerations. I've already hit on most of these, but I'll rapid fire them again. You're going to pay fees. You could potentially pay an annual fee. There are people that will charge you an inactivity fee if you have a credit line that you don't use. You could be charged, obviously, late payment fees. The interest rate, is it variable or is it fixed? That interest rate, does it go up if you miss a payment? Is there a penalty cost on your interest rate? Do you lose a good interest rate by missing a payment or something? Does it go up? And then finally, obviously, like you said, there may be a cutoff. There may be an expiration date. And one of the things that I find interesting is if, for instance, a credit card locks you down and basically says, okay, you're cut off, then as you pay that credit card down, your available credit reflects whatever the balance of your card is. So if you only had one card and it was charged to $100,000 and then they cut it off and you then owe $100,000 and have $100,000 available, so you have 100% used your
Every bit
available credit. And that, remember, guys, that's one of the things that will affect your credit score is how much available credit do you have and how much of that available credit have you used. So try real, real hard not to use it all.
I mean, a lot of these companies now, because they've gotten in so much trouble, then most credit card companies, most line of credit companies will then kind of give you warnings and send you messages like, here's your new score, here's your alert. Like, I'm looking at mine right now and it says, hey, your credit usage has gone up, and because I've got a lot of expenses right now for some events I'm helping with. And so it's saying less than 30% is good, but if you're over that, then hey, we got to worry about it. So there are tools out there to help you, but then at the end of the day, talk to a financial advisor, talk to somebody, talk to your bankers, try and figure out, is this the right thing for you?
Talk to Nicole, because she's a really good listener. She's just been sitting in here staring at us.
I know, she's just been looking at us.
I feel like I'm in school again.
Yep.
I have so much to add.
This was kind of just a short, sweet. Like Cort said, we've kind of beaten this one to death of credit cards, but this is just almost a different jargon, a line of credit, and people think it's something totally different. And it can be, but it's a general definition for a lot of things are underneath it.
Well,
credit cards.
Somebody might be trying to get a loan because they want to buy something. And so maybe they don't qualify for a home equity loan or a home equity line of credit or something like that because they don't have enough equity or whatever. And so they say, oh, well, why don't I just get a personal line of credit? Well, a personal line of credit isn't some special kind of bank loan that they give to people who are really great with really great business ideas. You can't just go out and buy and borrow $50,000 because you need it. There are still going to be qualification factors. And like I said, if you don't have security, you're probably going to pay a higher interest rate. So, you got to watch out for that. So don't let people using different language make you think that there are options out there available to you that aren't actually there or that aren't any better than a credit card.
Yeah, absolutely.
I think you both just bullseyed.
Oh, yeah. I'm done. Oh, wait. That's what I say at the end.
Oh.
You didn't join in.
There's the closing bell.
Ladies and gentlemen, you've made it to the end of yet another episode of the Bullcast Podcast. If you liked what you heard and you'd like to hear more, please feel free to go to your favorite subscription service and sign up to have our podcast beamed directly to your listening device every single Thursday at noon. If you would like to find out more about Cameron, Cort, Katie, or Nicole, please feel free to go to our website. That's bullcastpodcast.com. We've got a place there where you can leave a comment or suggest a topic you'd like to hear us talk about. And we've got pictures and bios if you like the those kinds of things. But hey, if you like pictures, you can also go over to Instagram and check out our Instagram. That handle is @BullcastPodcast. We also have an X handle for the occasional, when we want to shoot out some words or maybe share a meme or something. And that handle is also @BullcastPodcast. We have a Facebook page. We really will keep you updated on when our newest episode has come out if you follow that Facebook page. And it also will, you can look back through our old topics and whatever we've shared on that page. That Facebook page is Bullcast the Podcast. And then finally, ladies and gentlemen, as we always say, we work at a place called Pickler Wealth Advisors. And if you'd like to find out more about us, more about what we do, more about what we can do for you, find out about our amazing team and our boss, David Pickler, please feel free to go to that website. That website is picklerwealthadvisors.com.
That's advisors with a no.
Not an E.
Ladies and gentlemen, we've given you everything you need to know to go forth and very, very carefully and cautiously maybe take out a line of credit if you need it, but you don't use more than you need, okay? And so we're done. For now, I'm Cort.
I'm Katie.
And I'm Nicole.
And we're
out.